Before we get into anything, I want to say by the end of this video, I'm going to be sharing something with you that even shocked me that has to do with the broad markets. I am flabbergasted by it, but more soon. Listen, my name is D7. We're here at Grok Trade. It's great to have everybody here. I've been trading in the live markets almost 30 years. I own a hedge fund. Been using technical analysis for many years. When I say almost 30, 27 years. Own an education company for going on almost 20 years. So got a little bit of street cred. With that, I want to share a couple things with you. S&P 500 rising wedge. From last week's video, I want to say I massaged this lower line a little bit to encapsulate all of these candlesticks because I had a little higher. And let me show this. If I go to a line chart, do you see how it's not connected? I had this connected, that connected. That is still a good line. If I reconnect those, okay? I get here, near there, connect there, it broke below it, it's acting as resistance there. That is a good line. However, I'm going to drop that line right here. And I'm going to ask myself, do these two areas still make sense when I bring the candlesticks in here? Yep, makes sense there. Yep, makes sense there. And I still encapsulate those candlesticks. That is good. Big fat rising wedge. What does that mean? Bearish. Rising wedges are uptrends, higher swing highs, higher swing lows. However, it is condensing. You don't have two parallel lines going up, showing a nice channel upwards. That would just be a nice healthy uptrend. Instead, you have two lines going up, condensing together, making it a rising wedge, making it a bearish formation. In other words, sell at these areas. Do not buy at these areas, okay? More at that at freeonlinetradingeducation.com. Go to the chart school. Where? Again, chart school. Where? At freeonlinetradingeducation.com. Learn about rising wedges there. Great website. We're here. Now, the other thing I like to do is pull in some indicators. So this is a MACD. It's technically an oscillator. Why? Because it oscillates, and it's called a centered oscillator. Why centered? Because it has a zero line. If it was an RSI, like the one right below it, it would be a banded oscillator. It does oscillate up and down, but it has two bands in it. You know, I've got mine set at 30 and 70, okay? MACD has lower swing highs, and I put that with a red line coming across showing it's going lower. If you look here at the price action, the same area is going higher swing highs. That is showing a bearish divergence. Whatever this is doing is what that is going to do next. Now, what's fascinating here, RSI, relative strength indicator. For the last week, we've been crawling higher in the S&P 500. RSI has been drifting lower after being at overbought areas. So we have double bearish divergences taking place on the S&P 500 ETF called the Spider. And we're going up to the apex of this. We're very extended, very extended. We just keep melting higher. If I look at the weekly chart, this is a line chart. Let's take a look at this on the S&P 500. We have bounced and went up, and now it needs to catch its breath. It's trying to catch its breath after such a stellar run to the upside. We're not at resistance yet, but look how extended we are. I always look at the RSI and see if we're overbought. We're not. We're okay. No problemo here. Now, my Grok indicator, which we do have Grok trading algorithms, that's giving me a warning sign right there that I'm looking at on the weekly chart on the S&P 500. And the month, you know, we got a little bit of time before the month runs out, but it's worth taking a gander at on the S&P 500 ETF called the Spider, which we just talked about. That, my friends, we are at resistance in a monthly chart rising wedge. Guys, should you be buying right now or selling? Not supposed to be a trick question. That's supposed to be an educated question to help you become more educated, to give more educated answers, okay? So be thinking about this logically. And I do see I have a divergence line here that makes me want to pull in what was I seeing, and it's the RSI. So if I pull in the RSI, you can see this line is giving me lower swing highs, okay? And if I go up here for that same swing, we have higher swing highs on the price action. We have lower swing highs on the RSI. Big, fat, bearish divergence. We don't have it on the MACD. We don't have it there yet. But that is very interesting. Quick look at the weekly charts only, not monthly, because the weeklies are over. I do want to look at this. On the diamonds, let's go to the diamonds, take a look at that. You can see that we got to this swing high right there. See that? And we found resistance and we started pulling back. But we did break over this symmetrical triangle. Woe to us if we break down in it, and that will give us a bearish death hook. That will be bad on the weekly charts. The Q's weeklies. Up, and we break over a trend line. Woe to us if it breaks back down. It will not be, it will just be a jab. But I do want to take a look at RSI, see how it's doing. It's okay. So that's fascinating. But I look at the Q's. The Q's giving me a Grok indicator saying that could be problem. That could be a problem up here. Let's see what the Russell 2000 does. Russell 2000 weekly chart is not even near previous highs. It's showing relative weakness in comparison to the other broad markets. That should tell you something. And that is interesting that we've run up here. I want to take a look at a couple things. Nothing is really jumping out. And the fact that we do have on the Grok indicator, we hit this high and we're starting to hook to the downside. And if I look here, the financials, ETF, financials have been hit it's at a resistance and pulling back right there. You can see that there. And if you look here, bearish divergence is still in play. It's a big, long bearish divergence, and that's something we need to be watching out for. Let's see what gold has done for the week. Gold has pulled back. If I hold on, let me look at something. So for the week, it did a whole lot of nothing. But this is looking like, this looks more bearish than bullish to me. Let's look at silver. Ooh, silver's run up, and it's showing some weakness. If it breaks down into this, watch out for silver. VIX. VIX is just hanging in there for the week. It popped up there for a while, but it's come back down. If the VIX gets up over 20, guys, then you need to be looking to sell into that. We hit 120 on Bitcoin, not too bad. And we're over 3,700 on Ethereum. That's really good. Now, for all those who stayed to hear what the big news is, I'm going to share it with everybody. And I want to, you guys are welcome to leave. This is my monologue time. I'm glad to have you guys sit with me just for a couple more minutes. But here's the big news. The big news is this. The Wall Street Journal did their quarterly report. Wall Street Journal says, wow, their consensus says that our recessionary, the market's going into a recessionary pullback was at 70% for the longest time. It has now dropped to 30 to 33%. A incredible drop. Guys, for those that's been with me a while, you know we've been looking at the inverted bond yield inversion. Usually when that happens, it's been 100%, well, up until apparently now, that the market's not only going to a bearish recession, but it comes with double-digit unemployment. And the SOM SAHM SOM also confirmed 1 year ago next month, last August, it confirmed that we were going into a recession. I have the SOM rule saying recession. I have the inverted bond yield saying, inversion saying that we are going into a recession. Usually happens on the inverted bond yield when the 2-year and the 10-year invert. When that corrects itself, our data shows, and the hedge fund, I had the fund managers crunch the numbers for me. They came back and said the average is about 100 days after the writing, meaning when the bond yield writes itself, is no longer inverted. It's usually about an average of 100 days after. Well, we're way past that 100 days. And now, instead of saying that the recession is going to sink its teeth into the markets, instead what we're seeing is, whoa, the odds have significantly decreased for a recession coming. A lot of people are pointing to the Trump administration and the big, beautiful bill. As much hated as it's getting, it is setting up the markets to to catch some speed and to allow for some go-go juice to allow these stocks to continue to not only rise but maybe spike. So that is fascinating to see. This is going beyond all statistical norms, and this is going beyond anything that we have seen in history. So if we don't, in the near future, go into a bloody little recession, that's going to blow a lot of these previous stats out of the water, because these have been 100% correct leading into this new term with this new administration. And holy smokes, has this really opened a lot of eyes with a lot of people, and very few people are talking about it, which is just shocking to me. When you got that sort of about face, that should catch some attention. So if you notice, it didn't run. I don't run ads on all these guys. Have you noticed? Don't you hate when you go watch a YouTube video and they run an ad and you got to sit through a commercial first? I hate that, so for that reason, I don't do it. That's worth a like. Give me a like. Doesn't cost you anything to do a like. I like it when you do that. And I love it more when you guys leave comments and share your thoughts. Man, I feel lonely here when I don't hear anything. I don't get anything. You know, I want to hear your opinions. If you disagree with something, that's cool too. Disagree. If you agree with something, say that. If you're a Grok graduate, say you're a Grok grad. I don't know everybody's handles here, so I don't know if you're a Grok grad or not. For those people that go to Life Surge and Trade Surge, we're getting a ton of people coming through our program. You welcome, guys. It's glad to have you. We really love having you guys coming in and being part of the Grok ecosystem, and love you being a part of that. So that's it. If you guys feel like this is worthy at all, feel free to subscribe. And the good thing about subscribing is if you don't like the information we're delivering, you can always unsubscribe later. But if you don't subscribe, this will be the last time you'll hear this video or this level of trading education. Take care, guys. Love you much. Talk to you soon. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you are a trader, you rate you from amateurs to professionals. Mentoring will do that for you. Anyway.